If you're a Vermont homeowner, you know the feeling. You get that property tax bill every year and, oof. But what if I told you there's a state program out there that could literally put thousands of dollars right back into your pocket? Well, it's real, and today we're going to break down exactly how the Vermont property tax credit works. First, let's just get real for a second. Property taxes, they're going up. I mean, just take a look at this example from South Burlington. Almost a 9% jump in the school tax rate. That is a serious hit to the wallet, and it's a story that's playing out all across Vermont. But, and this is a big but, here is the good news. To help ease that burden, Vermont offers a tax credit of up to $8,000. That is a huge potential saving. So the only question is, are you getting your share? So here's our game plan. We're going to look at what the program is, figure out if you qualify, untangle that tricky definition of household income, walk through how to file, highlight the deadlines you absolutely can't miss, and then, the best part, look at the real savings you could be seeing. First up, let's piece together Vermont's property tax puzzle. We're going to understand the program that was specifically designed to help homeowners just like you. Right off the bat, let's be super clear about something. This isn't some weird loophole or a secret trick. This is an official program, straight from the Vermont Department of Taxes, created for one reason: to help you with your property tax bill. Okay, now for the million-dollar question, right? Could you qualify? Let's dive into the 5 key requirements to see if you're eligible. All right, here's the checklist. It's pretty straightforward. First, your property has to qualify as a homestead. We'll talk about what that means in a sec. Second, you had to be a full-time Vermont resident for all of last year. Third, nobody else can claim you as a dependent. Fourth, you have to actually be living in your home on April 1st of the year you file. And last, but definitely not least, your total household income has to be under the cap. For the 2026 claim, that's $115,400. So what on earth is a homestead? Don't let the word fool you. It's simple. It's just your main home, the house and the land around it, that you own and live in. Basically, it's the place you call home. And domiciled? Yeah, it sounds like a stuffy legal term, but the idea is just as simple. It means Vermont is your permanent home base. It's the place you always plan on coming back to, even when you're away. That's what officially makes you a resident for tax purposes. Okay, let's talk about the one thing that trips people up more than anything else: household income. And you have to hear this. It is not the same thing as the taxable income you put on your tax return, not even close. So what's the difference? Well, your taxable income is, just the income that gets taxed, but household income is a much, much bigger bucket. It includes pretty much everything, taxable and non-taxable money from every single person who lived in your home for any part of the year. So what does that actually mean? It means you have to count things like Social Security payments, veterans benefits, and even non-taxable pensions. And here's the real kicker. You also have to include income from everyone else who lives with you, your spouse, your partner, even your kids who have a part-time job, for the time they were in the house. The state does this to make sure the credit really goes to the people who need it the most. Okay, so you're thinking you might qualify. Awesome. Now what? Let's get into the nuts and bolts of actually filing your claim. The state has actually made this pretty painless. It all comes down to 2 forms. Step 1, you fill out Form HS-122. This is where you declare your homestead and claim the credit. Step 2, you complete Schedule HI-144. That's where you add up all that household income we just talked about. And Step 3, you just file both of them on time. That's it. Now here's a little pro tip for you. Before you even start filling out forms, do yourself a favor and grab this stuff. You're going to need your property SPAN number, that's on your tax bill, your Social Security number, and that same tax bill to find your house site value and tax amounts. Having it all ready makes things way faster. All right, let's talk about something super, super important: the deadlines. You've got to pay attention to these dates for your 2026 claim. So here's your timeline. April 1st, that's the day you have to be living in your home. April 15th, yep, tax day, that's the main deadline to get everything filed. But if life happens and you miss it, you're not totally out of luck. You have a final deadline of October 15th to get that claim in. So we've gone through all the paperwork and the rules. Now for the really fun part. What does this all mean for your bank account? Let's look at the real-world impact of this credit. And believe me, this isn't just some theory. In South Burlington alone, thousands of your neighbors are already cashing in on this. This program is having a massive, direct impact on people's lives. Just look at this number, 43%. That's nearly half of all the eligible homes in just that one city getting this credit. It's not some obscure program. It's being used by a ton of people. And the savings? They're not just a few bucks here and there. The average credit for those thousands of homeowners was $1,950. That's almost $2,000 back in the pockets of Vermont families, which goes a long way to knocking down those rising tax bills we saw earlier. So, when you see these numbers, you really have to ask yourself, are you leaving money on the table? If your neighbors are getting back, on average, almost $2,000, what would you do with that extra cash? It is absolutely worth taking a few minutes to find out if you qualify.